What's good, YouTube? Jonathan Dorn, CPA, licensed CPA in the state of Florida. This is Basic Accounting Tips Part 2. Let's get this shit in. If you missed Part 1, go to the homepage, CPA Strength, and watch that one first, because this one won't make as much sense. So anyways, now I'm going to do this on all my basic accounting tips from now on. We're going to go DC, debit, credit, aid, LER. Now, I'm a CPA and I still do this. You can do this in the first day of accounting class. DC, aid, LER. Debit, credit, asset, draw, expense, liability, equity, revenue. DC, aid, LER. Alright. So, now, every time you do a journal entry, you are going to have at least one debit and at least one credit. Every time you input something into the books, you're going to have at least one debit, at least one credit. You might have 20 debits. A lot of times you will have 20 or 30 expenses and money coming out of the bank over here. So you might have 20 debits, one credit. And no matter how many different entries you have on each side, it's always going to equal. Always equals. A lot of accounting software won't let you leave the page or whatever if the debits don't equal the credits. So that's a steadfast rule. Take that one to the bank. Tell your mama it's always going to happen. So now you're just going to have to remember that debit is always on the left. Always. Credit is always on the right. Now, one's not good and one's not bad. See, I got confused for, I'll be honest, about 2 years of my accounting career, because I thought debit, I was confused because I thought asset is good, right? Right, so I thought, okay, debit's good. But then revenue's good, money's good, income and money's good, and so I thought credit's good. So, you know, that's totally wrong. The way to think about this is, you know, neither good or bad, just is. Neither good or bad. Okay? Now, these are positive. These are positive sides. So, if you have a positive asset, if you have money coming in, that's a debit. If you have a negative asset, it's a credit. So these are all positive sides. Positive. You'll see where that comes in later, because you can have an asset. If there's an asset leaving, if there's money leaving, it'll be a credit. So, but anyways, so these are positive sides. DC, aid, LER. Alright. Now you might ask, what is, you know, what are these? And I'll just try to keep it simple and brief for now. Now the most common assets is cash. The most common asset is cash. Okay? But you also have accounts receivable, inventory, equipment, buildings. So that's assets. But let's focus on cash. Cash is the most common, and a lot of entries, especially in the beginning, you want to know what to do with cash. That'll help you. So those are the assets. A draw is when, say, when an owner, this can also be owner's equity. You might see this as owner's equity. But anyways, when the owner writes a check to himself, it's a draw. Or if it's a business, it might be like if it's a corporation, it could be a distribution or a dividend. So, and it's almost the other side of equity. So, distribution is the draw. An expense is something you spend in the hopes of making some money for your business or whatnot. We'll just say rent, utilities, and such and such and such, telephone, internet, internet. All right. So now these are all positive debits. Aid, DC aid. Now let's go with LIR. Liabilities. These are going to be accounts payable. What do you owe somebody? Wages payable. Now almost every liability is a payable except earned revenue. So if you see a payable, it's a liability. So the owner's equity, you're not really going to mess with that too much. It's mostly the retained. We'll just say it's retained earnings. We'll just have it at retained earnings. We'll get into that later, but for now, just the owner's equity. That's how much you have in the business. The owner's equity, the equity, what you have in the business. And also revenue. So that's you make a sale, you do service, that's going to be revenue. So sales, service. You guys love my handwriting? That's a lefty strength. Oh, I think it's August 13th day. It's lefty day. So any lefties out there, we're the only ones in our right mind. Yeah, I joke. I suck. Anyways, so let's get back to this. So that's DC aid LIR. So you know kind of what they are. All right. Now we're gonna do some journal entries in the next video. I just want you to know, watching this one, that expenses and revenue, that's the income statement here. This is what's on the income statement. Now when you file your taxes at the end of the year, you're pretty much going to give your CPA, you're going to give them the income statement, and you're going to give them the balance sheet. Now the balance sheet's the biggest thing. That's why you might or might not have heard of it a lot. Balance sheet carries over you from year to year. And the balance sheet is the basic accounting equation, which is assets equals liability plus equity. And we'll go over that, of course, later. I just want to show you that the DC aid LIR, it just works because you have your income statement right here, and then you also have your balance sheet. See, assets equals liability plus equity. So there's your balance sheet, and the draw is basically the other side of equity, so it can kind of be included in there. But anyways, that's part 2, and I'm obviously not a teacher. I struggled for years. I actually had an accounting degree, didn't really have a full grasp of this. I freaking struggled, and I learned this. I learned DC aid LIR, and once I started writing this down every time and referring to it while I was doing journal entries and problems, the light bulb went off. So I feel like I need to share to people who struggle. You don't need T accounts with this. This is kind of a T account. This is all you'll ever need. DC Adler, really. Anyways, if you've liked the video, get a thumbs up, give me a like, subscribe to the channel. I'm gonna have a whole bunch of stuff: CPA, strength. I love being a CPA, and strength because I'm gonna be the strongest. Let's see, strongest CPA in America, and I'm hella addicted to working out. So deuces.